So getting right into the charts, let's go over three indicators that every trader should know, at least to begin with. Here we have, we're trading on gold. It doesn't really matter what asset you're trading, as indicators can be applicable across all instruments. At the same time, let's start off with the Bollinger Bands. We can see that on the Bollinger Bands, there's periods of trend shifting up and down, but what really matters is when we're actually poking out of the limits of the Bollinger Band. The Bollinger Bands are designed so that you're only actually escaping the limits 5% of the time. So 95% of the time you'll be trading within the Bollinger Bands as shown here. But as you can notice here, every time the price action pokes out of these Bollinger Bands, it actually causes a pivot to the opposite direction. And this is a repeated phenomena. This is how the Bollinger Bands are actually meant to work. So here we can see we poked out from below, we actually moved up in terms of the price action, we poked out from above, and then we got sent right back down. Here we poked out from below, and again, it's a trend reversal. So you can see how the Bollinger Bands work over here. And moving on to the next indicator, we're going over the RSI. This is the Relative Strength Index. So, okay, you can cut that part, but... okay, let's start again. Now that we've accessed the RSI, this is the relative strength indicator. So here there's it consists of oversold levels, which means below the 30 region here. As you can see, it shows you the level we're at on the right-hand side of the screen as shown. And it also shows you the overbought region, which is over the 70 region on the RSI. You can even use this to enlarge it and look through it. So basically, every time we're oversold, this causes an influx of buyers to come into the market. Every time we're overbought, this causes an influx of sellers to come into the market. And you can notice this within the price action. So here, as we went through an overbought region on the 9th of March, it obviously caused a trend shift and to the downside. We had a lot of buyers, which actually cause a trend shift into sellers. And this is a repeated pattern within the markets, which works across all instruments. And of course, this doesn't mean it happens 100% of the time, as you can be oversold or overbought for very long periods of time. But this is a great indicator to use in conjunction with your Bollinger Bands. Now let's get on to our third indicator. This is the MACD. The MACD indicator, the moving average convergence divergence indicator. This is another powerful tool which shows you trend shifts. Of course, it is a lagging indicator, but it's a great confirmation when used with your Bollinger Bands and your RSI. So here you can see that when we actually do change trend, and the crossover essentially shows us pulling up in terms of price action. And again, we can see a crossover right at the top, and it causes a downward movement in terms of the price action. This is very self-explanatory, as you can see. And on top of that, you can see the oscillator bars here, which also give you another point of confluence if that was something you were looking at for. Going through this indicator, we can actually see that we might be crossing over shortly. At the same time, we just moved out of an oversold region, and we were poking out of the Bollinger Bands at the same time. This is three signs of confluence showing that we may be moving to the upside once again. So let me know what you think of the indicators we went through today, and I hope you have a great rest of your day. Thank you for joining us on another episode of Trading with BlackBull Markets. We wish you a profitable trading journey.
Nice.